Welcome to Nebulus's weekly review. The price of Bitcoin remains indecisive, and we will have to be very attentive to see what direction it takes. Let's get started. Last week, we had a fairly strong volatility movement, leaving a weekly candle of indecision, where we saw an attempt to break down with a wick that touched $39,600 and turned down to touch $44,500. During the week beginning January 10th, the total volume stood at 13,149 Bitcoin, and the price was trapped between a range of the support of $40,500 and $42,500 and the resistance of $44,000 and $45,000. If we look at the relative strength index, the RSI, marked at the bottom of the chart in blue, the trend is downward. In other words, bearish, where sellers are stronger than buyers. On the other hand, the blue-colored MACD indicator located at the bottom marks the divergences and convergences and is calculated with the exponential moving averages of 12 and 26 periods. The indicator's histogram, which has many closely spaced red bars, confirms the strength of the downtrend and the control of sellers over buyers. Also, if we look at the crossover between the orange signal line and the blue MACD line, we can clearly see a bearish trend. Moving averages of 20, 50 and 100 periods are plotted on this chart. As we saw last week, for a trend reversal to occur, the price would need to strongly break above the approximately 44,000 resistance confluence zone and the top of the descending channel, drawing green candlesticks with closes above that zone. If we turn to the daily timeframe chart, we see that the price is trapped in this descending channel with lower highs and lower lows, which confirms the downtrend. On the 10th of January, we saw a candle that tried to break out of such an important area of support that it ended up drawing a hammer candle, which represents a lot of buying interest at that point in the market. But the price rejected the move to the resistance zone of around $44,000, and in that area, the selling interest recovered, which yesterday took us to this support area in which we find ourselves, around $41,800. And now we move on to discussing the RSI, or the Relative Strength Index, on the daily time frame, where there was a divergence from the price but was cancelled out when we reached the 28.9 area, confirming greater strength from the sellers. As we can see, on January 7th, the nullification of the divergence was confirmed, and we automatically saw the rejection by that buying interest, taking us to 41.33 points in the RSI. To see a sign of weakness in the downtrend again, we should see that the RSI fails to drop below the 28.9 points, as this would form a bullish divergence from the price. For that divergence to form, we should see lower lows in price but higher lows in RSI. As we can observe in the MACD daily timeframe, this swing indicator is in an oversold zone, meaning it is still below zero. If we draw an uptrend line on both the MACD lines and the histogram, we can see a reduction in bearish strength. This signal to confirm a change in price trend, it would have to stay above these white lines. However, if we see the signals break these white trend lines, it would indicate that selling pressure continues to build, nullifying the divergence and confirming a convergence. As we mentioned in the previous analysis, in this chart, we can see that the so-called death cross has already occurred. That is, the 50-period average has been crossed below the 200-period average. This tells us that the downtrend is confirmed, but we have to keep in mind that moving average indicators are late indicators. This means that even if this death cross occurs, we will not necessarily see an abrupt and volatile price drop. It simply gives us a signal that the selling force prevails over the buying force, which should keep us in this descending channel longer. To confirm the continuation of the downtrend, we would have to see harmony between effort and result. What does this mean? If we see a red candlestick with a large volume entry closing below this very important support zone, marked with the pink circle, we could see a move towards the zone indicated with the white arrow, which could be the next support of the area of $38,000, where there is an important area of confluence. As we can see, if the support of the pink circle were to be broken, we would go to test the triple confluence zone, in which the support zone of $38,000, the bottom of the descending channel, and the 0.78 Fibonacci retracement. The market indecision in Bitcoin is also influenced by the indecision in the traditional market. If we look at this chart of the SP 500 index, we can see a red engulfing candle that demonstrates a lot of bearish strength. This movement of speculation is taking place due to the news of the rise in interest rates announced by the FED, which affects all risk assets. On the other hand, another very important fundamental is the IPC, which increased by 0.8% in November and 0.5% in December. And in the entire year of 2021, it has risen a total of 7%. This tells us that the buying power with fiat money has dramatically decreased over the last year. In short, all of these fundamentals directly affect risk assets and cause investors to reduce their exposure to the market. In fact, if we look at this data, we see how investment funds continue to reduce their exposure to Bitcoin in the months of December and January, after a previous accumulation phase in the previous months. As we saw in the previous analysis, the exit of Bitcoin from exchanges continues. In other words, there are fewer liquid Bitcoins in the exchanges. As of January 17, there are just 2.3 million in exchange reserves. If we look at the last 2 days, we have seen a small increase in Bitcoin reserves, which has led to a slight decrease in the price. So you have to watch this space, because if it continues, we could see a continuation of the downward movement in the price.